try that microphone. Hey, there we go. All right. For whatever reason, it decided to pick a different microphone. Now I think we're good. Yeah. All right. There we go. I don't know what the heck happened there, but got the microphones figured out. Welcome, welcome, welcome. Hopefully everyone is able to rest up, get ready for the day ahead and all that fun stuff. As always, before we jump on the right side of the screen, make sure to read through the live Trader Morning Prep PDF. Very important to go through and understand everything that is inside there. Oh, Ziggy, I don't need your help, dude. Sorry, my cat's trying to say hi too. All right. Just a quick reminder for you all before we jump on in. Keep in mind, please keep in mind that the YouTube broadcast does have between like a 5 and 30 second delay, depending on where you're logging in from, which will definitely impact what I may be talking about at the time. Also, I just want to take a second to give a shout out to our latest members that joined overnight, yesterday afternoon, this morning, etc. Thank you so much for the support. I'm pumped to have you on the SSFTG family. Welcome aboard. If you aren't a member yet, you do have a few different options to check out if you are looking to further your trading education and career, or if you're just looking for a cool chat room to hang out with a few other traders of like mind. Here on YouTube, you can check out the join button below the stream. YouTube family, they gain access to the extended hours trading room, which continues from the morning session from like 10 until 10:30, 11 o'clock, whenever things slow down. Every member also gains access to the Discord chat server, and of course, you get the awesome badge next to your name to show your support here on YouTube, and it just looks cool. To understand the trading approach that we're using every day in the room here, look no further than the Day Trading Academy. Listen, this isn't a small PDF guide that you're going to finish in an afternoon. You're talking 19 plus hours with study guides, homework, review, etc. So you better tuck in. There's a lot to it. And then finally, the big kahuna, the Mac Daddy, the VIP. VIPs have exclusive permanent access to our non-delayed stream covering the entire morning session to ensure that you're on the fastest connection possible, and that way you don't miss any beats along the way. Alongside that, VIPs also have access to our monthly webinars, which there'll be one coming up this month as well. We just passed another one a few months ago, or a few days ago, last week, I think. Private VIP events, one-on-one scheduling access, all kinds of cool stuff. So whether you're here for the very first time or you're a seasoned VIP veteran over on the Zoom stream, welcome. I'm glad to have you trading alongside with me today and analyzing these crazy markets. Let's take a look at the news, take a look at some charts, all that fun stuff, and then let's dig in. Congratulations to the winner of the giveaway. Yes. We did the first giveaway video yesterday, and we had our first winner on the giveaway. So we're on our way to the 2,000 subscriber mark. If you're not subscribed yet, I would love it if you did. That way we can get to that 2,000 mark faster, and we can do more giveaways. I've got 3 more giveaways ready to go as we progress towards that 2,000 subscriber mark. So. Got a few more going. There's a few more coming down the pipe for sure. So, congrats to the winner yesterday. It was really fun. I'm glad it worked. If you couldn't tell, I was kind of excited that it worked when I was recording the video because I wasn't sure. It's the first time I've ever done that. Oh man. Don't forget to grab your morning DP levels. Those are posted for you this morning on the major 7 markets that we take a look at: the Nasdaq, S&P, gold, crude, euro, Bitcoin, and Ethereum. All of the majors. As far as the news goes, I mean, the news calendar, we do have a few things happening today. There's just a small little piece of something going on today that might have an impact. 10 o'clock, we got the JOLTS job openings for May. That's forecasted 9.388 million. Today's Wednesday, and like we were talking about yesterday, you'll notice crude oil inventories aren't today. API is today, and that's because Monday was basically off for the holiday, and that pushes everything off by a day through the rest of the week. Now, tomorrow, we will have the crude oil inventories at 11 and natural gas inventories at 10:30 because that's their normal times. But the API at least gives us an idea of what to expect, which comes out at 16:30 a little bit later. Between then, we do have 15:30 news, FOMC member Bostic speaking, and then, of course, the big one, FOMC meeting minutes. Yikes. If we wanted to make today any more weird, that's a really good way to do it. Throw some FOMC meeting minutes on there, and that'll get the job done. So as far as the news is concerned, we only have one announcement this morning at 10 o'clock that we have to keep our eyes on, but there is definitively news this afternoon as well that you want to keep your eyes out for too. What are your thoughts on trading the Russell? I mean, the Russell is the thing that's nice about the Russell is that it's a very volatile market, right? It's kind of like the NASDAQ in that sense, where it jumps around a lot and it's got a lot of opportunity. But the counter side of that coin is that there's a lot of risk too. So, I mean, it's a great market and it jerks around. It barely ever trades outside of the Euro session, or if it does, it's kind of herky-jerky. It's definitely a US-based market that, I mean, obviously makes sense, but it moves a lot more in the US. And it's just a good fit for traders who are looking for that time slot. It's got really good movement for the most part in the morning session. But again, the concerns are the illiquidity and the drastic lack of volume that can cause huge slippage and a lot of problems. I like Russell, not necessarily on the scalping perspective because of the illiquidity. It's a great market if you're buy, bid, sell, ask, if you can get filled. But the thing that I like about the Russell more than anything else is that it's, as far as a swing trade perspective goes, it packs a lot of punch if you can get it to set up. There's always a caveat, right? So it's an all right market. Just definitely U.S. prominent, that's for sure. Looking at the NASDAQ, this thing just keeps going up. We had that ridiculous V-bottom yesterday. What in the world? Jeez. If we zoom out a little bit further to like a 60-minute chart here, again, this market is incredibly overextended to the upside and is due for a correction at some point. Doesn't mean that it has to today, although it did follow that pullback yesterday. It ripped right back up to the top. One very obvious thing that we can see here is that the POC is still down at 13,649.50, and although we are seeing some strong pops in volume, we're not seeing necessarily enough to shift the POC. But take note of this gigantic chunk of volume that came in here, because that stopped here. And if you look at the volume node, I mean, the max volume's over here. It's only got like maybe 15-20% to go. Now, the reason why that's so impressive is because the market barely spent any time there. Like, it barely spent any time there. Whereas here, this was days and days and days to fill in this POC. It took them, what, like 3 days to challenge it? That's insane. That's a huge amount of volume that came up into that top. That might explain why this was such an aggressive flush back, so traders can try to exit with mitigated risk or slightly lower losses. Looking in the bigger picture, although we haven't seen the POC shift, it is fairly obvious that they're trying to bring their average up a little bit further. Likely they haven't done a ton of work, but it's probably hovering around the 14,100s now, maybe a little bit lower in the 14Ks. Be a likely point of interest to see the market pull back anyway. As the market continues to go higher, though, well, I mean, it is what it is, right? We've got to just approach it in the mentality that it just keeps going up, even after that crazy V. Well, I mean, look at this. What in the world? That kind of movement's freaking crazy. But if we look at the overall volume, where did they plop it? Right up at the top. Market broke back above. There's our market trait again, near miss. And it goes screaming back up to the upside. Incredible movement to the, I mean, this is ridiculous. I mean, it's a good thing and a bad thing. It's good because the market just keeps going up, but the bad part is, man, when it pulls back, that could be nasty. Anyway, looking at the S&P, going from the bottom all the way up before that drop. And let's shift that over to minute. There we go. We've got the POC, which is a little bit further down, 42.85 quarter, but let's include all of it and see if anything changed. Nope, it didn't. So, in terms of potentially trapped traders, they are. If these are shorts, then they are massively underwater, although to be fair, it does look like they've had at least a couple chances to get out near break even. This big slide back, the fact that it missed it, that's a really big clue. This might not be done to the upside, as crazy as it looks. Very strong momentum. Over on gold, bump in a little closer here. There we go. From the new low perspective, we finally have broken out a little bit further up. We've got the initial drive higher, and then it kind of chopped around for a little while. Wasn't really sure what it wanted to do, kind of pulled back pretty aggressively, but you'll notice that it kind of missed it, right? We've got another one of those misses. So the fact that it missed it, now we've got the potential of this turning into a continuation leg to the upside, which is now fairly aggressive. But this lower high is where the concern lies, because if this is a completionary leg to the upside to re-challenge that resistance up there, remember in the 1810s, 1815s, well, they responded. So given that response, this could also be the start of a very nice ABCD correction. We've seen a lot of those recently, and a lot of them have been almost perfect, 1 to 1 to 1 to 1. So if we look at it from top to bottom to pullback, a 1 to 1 type move, as far as an ABCD correction, puts it at 1784-ish in some change. Maybe they can pull back, maybe they can't, but man, the fact that we're finding some of that resistance off the top is a definitive sign that buyers are taking profit, and we could definitely use a little bit of a deeper pullback. From the cycle perspective, we've got L5s off the lows, continue back up. L5s usually want to pull back to a 2. They got the 2 right there. They rally back up. Now we've got 1s. They get another pullback to 2s, break another high. They pull back to 2s. We break another high, and we have done what? We've pulled back to 2s. So, I mean, we might get another leg to the downside, but that's pretty strong, right? That's a good intention from the bulls to try to carry this thing back up. So they definitely have a shot to try to carry this back higher without even necessarily needing another leg to a new low. It could also be a higher low. You know, it wouldn't be the first time we've seen those. But as far as 1-to-1 moves, we've got a little ways to go yet. On crude oil procured that fantastic bounce. And, you know, in hindsight, I was kind of right, kind of wrong, kind of right, kind of wrong, man. It was a nice exit point because it did flush all the way back down to the lows, but then it rallied up like $1.50. And keep in mind, this is like 5, 6 in the morning. And by the time we come in, it's all the way down here, and now it's kind of back up. This thing's all over the place. Lots and lots of stuff going on with crude oil in terms of the volatility, and this massive drive to the downside. I mean, geez, that's the kind of thing that you would expect to see, at least from the potential start of a new trend to the downside. Now that's incredibly difficult to say because, again, you zoom out to like a 60-minute. How could we ever say that this is a bear trend? But remember, how could anyone have ever said that the bull trend was starting here? Right? It never feels right. So we've got to kind of keep it in the back of our mind. This is a very strong pulse to the downside. We have crossed below all of the moving average clusters. This could simply be a reversion back to the mean. If we're looking at it from a value perspective, going from the bottom to the top, let's see if there's anything of interest going on there. We already know there is. That's where the purchase came from last night. Or, yes, well, kind of last night, whatever. But if we take this from the bottom and we transpose this all the way to the highs, we can see that it is a very obvious break-even bounce for the sellers to get out. So, incredible bounce. That was that slide through. Remember, we were looking at the POC inside here, and they just totally axed it. They finally did get that drive down to the next one. Got a nice bounce. Continuing back up, continuing back down. We're kind of laying on top of the decision point. If we get underneath 73.27, 73.30s, they could be in for some trouble. And then it's like the ABCD leg back down again, which would be absolutely crazy. I don't think it's going to make a 1-to-1 ABCD leg down just because of how extensive this move was, but just forecasting at least. If it does, that would put it out at 71. Jeez. Over on the euro, I mean, this thing just continues to do nothing. If we go from the top to the bottom, we can see if they've actually been able to transition anything. They have not. The POC is still way up at the top. The way that this is moving is getting closer, more likely at least, to the end of the trend. This first initial drive down was likely, we've got wave 1 into the wave 2 pullback. And that wave 2 pullback, you'll notice, was very, very sharp. So if we utilize that mentality and go down, typically, if wave 2 is sharp and aggressive, wave 4 is a mess. And that I think that's pretty safe to say that wave 4 was a mess. And now that we're continuing back down to the lows, well, we're kind of back down to the lows. Usually, the market is going to want to go about 0.6 to 1. So what I mean by that is if we're taking this in context and we zoom and scrunch a little bit, we go from the top to the bottom, we get the pullback, the big drive down. That was 2 times the first leg. So we are in definite category for that leg 1 or wave 1 to equal wave 5. So if we're looking at that perspective, visually speaking at least, that would plop it right around this 0.4-ish area. Again, typically markets like going at least 0.6, but it doesn't have to. And if we take that first leg, and we measure it out over here, they've actually gone beyond it a little bit. We'll see. So far, though, the bears seem like they're still in control. We're below the POC. We have not had a POC shift. The buyers have failed every single attempt they've made. It's looking pretty good for it to keep falling down. But when we start hitting these objectives on the lows, man, we've got to really start paying attention because that could be closer to the bottom than anything else. And then looking over at Bitcoin, which is still a sideways mess. It hasn't gone anywhere. We're literally still inside yesterday. It hasn't gone to a new high or a new low. It's just waiting. Over on Ethereum, we did get a little bit more of a continuation pop back to the upside to re-challenge July 4th's high. So the 4th of July, the fireworks that they did over there, we're hitting them again, and we're running into a little bit of trouble. The way that this is moving to the upside is visually very straightforward, right? You've got this incredibly obvious higher low. But once that higher low kind of formed, we've got this kind of secondary little wedge kind of breakout formation that took place at the lows. And that sparked the whole move to the upside. The next pullback, or really this could be the whole start of the thing, created that next bounce point. We've got another rally up, continuation down, new high. And this is where you've got those 5 waves to the upside. Your typical Elliott wave impulse leg to the upside, normal stuff. Then we should see an ABCD correction back to the downside. Leg A should have a 5-sequence impulse inside of it, based on the rules at least. So we should have an ABCD correction down that has a 5 wave. We can already see it does. It's fairly straightforward there. 1, 2, 3, 4, 5, all the way inside there. And you could even widen it out a little bit further. Either way, potential for an ABCD correction to the downside, which they have already done, and now we're back off to the races again. So if this is going to be the continuation higher, then realistically we should see another type of incredible impulse leg to the upside, 2-legged pullback, that was that wash, and then another continuation back to the upside. We kind of continue the cycle. That could be starting off... what the heck just happened? Okay, well, that just destroyed all of my drawings, but that could be stepping up for another rally back up into the 2450s if it wants to get up in that point. We'll see. Let's jump over to the 500 tick and the Asian session's basically not even existent. Looking at the overall movement that we had starting off on the daily, and we've been kind of chatting about this daily chart for a while here. But the way that this thing is moving is just... It's bringing flashbacks, right? I mean, it's about as flashbacky as we can get to every one of these gigantic legs to the upside preceding a gigantic drop. Now, if we use some of that historical information to our advantage, and we go from, let's just say, the low to the high, let's see what happened on this jump to the upside. Oh, God, don't do tick. Shift it to minute. So here, we've got a POC down at the bottom. And again, crap, this doesn't go farther back than 2 years, does it? I'm going to have to use TradingView to see kind of what the repetitions are and what the market traits are. But let me pull up TradingView real quick. And we'll go NQ1 exclamation point, right? Yeah. So, jeez. Yeah, here we go. So if we go a little bit further back, we can kind of see on a, let's go to, I don't necessarily want to go to a daily, I guess, but we're probably going to have to. It's been just nonstop to the upside, fairly obviously. From this perspective, this whole market could use a pullback, right? I mean, the last time we had a substantial pullback was a 2008 drop. Before that, it was the 2000s. So this is where my concern stems from, right? Because if we look at this like on a weekly perspective, look at this thing. Like, just take it in, you know? Now, here's the cool thing. the thing that really stands out on this is that this could potentially, all in one, be one gargantuan 5-wave to the upside, and this may still be inside wave 3. So the next pullback that does occur is going to feel absolutely catastrophic. But realistically, it would make a lot of sense to see that heavy drop to the downside and re-challenge some of those previous zones. Let me take it off logarithmic so we're not talking about NASDAQ at 797. But, I mean, really, look at this. It's absolutely absurd how this thing has moved. This is not sustainable market movement. This is dangerous market movement. This looks like a penny stock pump and dump. As ridiculous as it feels, it looks like a penny stock pump and dump. Let me show you. If we go down to MTR, Mike Tango Romeo, this is one penny stock pump and dump that we've been talking about. Just had a really nice blast off. The exact same thing. Massive bottom weighted POC, giant jump to the upside. And this is the early phases. But if you look back at something like, what was it, AMC? Yeah, AMC on a weekly. Ooh, weekly might be a little much. Let's go to a daily. All right. And we take this entire leg all the way down before the giant rally up. You'll notice what happens. This happens over and over and over again. Accumulators accumulate a specific zone. It could be an arbitrary number. It could be a psychological number. It could be a lot of things. But when you're going to get a pump and dump, typically that POC is smack at the bottom because they were the ones that created the bottom. We're not talking you and I. We're talking, lots of zeros on the end of the bank account, a heck of a lot more zeros than I have. All of us combined, a heck of a lot more, right? I mean, we're talking some serious cash. So when we're looking at this kind of POC and this continuation to the upside, typically what you want to wait for is that POC to shift. That would suggest that those traders are exiting for profit. AMC is a good example. We haven't had that yet, right? And it just keeps on going to the upside. If you look at NASDAQ in correlation, oops, did I do it backward? 1 exclamation point? There we go. When we look at it from that perspective and we zoom out to something like a weekly chart, I mean, it's hard to not see the just absolutely ludicrous amount of movement that's going on here. I mean, could we see the NASDAQ all the way up to 20,000? Definitely. But doesn't this kind of feel like Bitcoin a little bit? I'm just going to throw it out there, right? I mean, geez, oh Pete's, look at go backward and look at Bitcoin. Before all of that, right? We've got kind of like a little wedge inside, higher low, gigantic breakout to the upside, catastrophic drop. If we're looking at the NASDAQ, got to go to a weekly. We have just this gargantuan rally to the upside. And the last time we had a catastrophic drop, if we're looking at it from a value perspective, that was an 84% drop. Let that sink in for a second, because that means that there is a potential for an 84% drop in the NASDAQ as well, to bring into alignment previous support resistance. Now you tell me, where does 84, 85% slap that thing right back into? I mean, I don't like talking about doomsday stuff, and I want to see this thing go all the way up to the moon and keep going and never pull back, but we got to be realistic here. This is incredibly dangerous. So, honestly, it feels like it just needs a catalyst. The last time, everybody thought the world was going to end. Y2K! There's obviously a lot of other things going on in there. I mean, this is like a global collapse. Like this is some serious problems if that happens. We're still up at the top, right? So don't get me wrong. I'm not going to say, oh, we're at the highs and we're going to start coming down tomorrow. But we've got to be realistic here. This is an incredibly dangerous market that we are treading inside of right now. Just throwing it out there. We haven't seen the POC shift. We haven't seen any concerns. We haven't heard anything from, any global news or anything like that. Although, who knows, aliens and trade, or what is it, the Galactic Federation and, all of this other stuff. Who knows? But, I mean, let's, without being facetious here, there's a lot of potential for some pretty nasty stuff the world's going to end if this happens. I don't necessarily think it would end. It didn't end the last time it dropped 84%. And if you go historically before that, it didn't end the last time it dropped 80%. And before that, it didn't end when it dropped 80% then. But typically, if you look back at all of those massive drops, they're almost always surrounded by war. Almost always. Well, it's summertime. We haven't heard any rumblings recently. But now we've got nukes going off under the lake, testing, quote unquote. We have scientists that can tell you exactly how that's going to happen. I don't understand why they need to test it anymore, but I don't know. I'm just saying, I'm throwing it out there. It freaks me out a little bit. That's why I go into these markets every day so hesitant to want to hold on to anything for a long period of time, because really, why? The biggest pullback that we've had in years has been 30%. The value pullback is double that at least, so you're looking at 60 to 65%, and the previous one was 85. Whew. That's what freaks me out. You know, not to go off on a tangent, I know we've only got 4 minutes until the open, but, you know, I mean, it either happens or it doesn't. Right? All markets, real estate, etc. Yeah, I totally agree. I mean, how do you not look at the weekly chart and just kind of quiver a little bit? Like, what? Where is this thing? I don't know what the next catalyst will be, but there will be one. I can tell you that much. And I can tell you that the next major pullback is going to be about 60 to 85%. Because that's what happens. I don't know when it's going to happen, but that's why I'm nervous every day we come into these markets, because I look at that weekly, the daily, and it's like, how could I buy and hold up here? You know, with any size, at least. You buy a little bit, hold for a little while, goes back to the highs. Cool. Eventually, it's not going to go back to the highs. You know how many people are going to be trapped in that? Oh, man. It's coming. Believe it. My son's been watching Naruto a lot. It seeps into my every being. Anyway, judging from the daily chart based on the 60-minute, judging on the 15-minute, nothing... It just keeps going up, right? I mean... That's what it comes down to. And if we look at this monstrosity of a rally from the bottom, first off, let's take it all the way from the top to the bottom. And then from the bottom all the way up to where we are now. Now you can see what happened. We were talking about this yesterday on how this transition down is so strong, and this was, I believe, right about in lunchtime, where we should have one more leg down for a fifth wave. Right? We've got wave 1, which is way up here. You've got that gigantic leg down for wave 3, wave 5, or I'm sorry, wave 3, and then wave 4, wave 5 should complete the lows. They did, and from there we should see some type of an ABCD consolidation pattern or something along those lines, which we did, but it broke lower. Well, wait a minute. If they're breaking lower, then obviously these bulls, assumably they would be bulls, because look at where the POC is. It's right at the bottom of that previous swing. Why wouldn't buyers buy there? They were incredibly wrong, and they exited. With that exit, it slid all the way down to the bottom and then shot right back to the upside. And you'll notice there was very little volume except for right inside here. There was a lot of volume down at the bottom, obviously, but then a big chunk started coming back up. These were likely sellers trying to get this to fall back down, and they failed. So they jerk back up above. What do you think they're going to try to do? We're back to the previous POC. Now we've got resistance. This is their chance to try to average in, build up, which we can see in volume. And if we go backward a little bit, almost a guarantee that the POC would have been there. Yep. So they drive their POC up. And what do? They get the heck out of the way. They know they're wrong. They don't have any business being short anymore. It feels painful to give all of that back, and I doubt they gave all of that back. But if they had any runners or anything left on the table, they exited. And with that exit, there's nothing to stop the market from keeping going. And as we continue back up into another high, we complete another POC on the top, which was the seller's chance to try to get it going. That's that third kind of pulse to the upside, and that failed and rotated back up. So Even if they do shift the POC to the upside, like, does it really matter? It's just going to be another failure, right? We'll see. Ooh, that's a good question. I don't know if I can go farther than a monthly chart on this. How far back does TradingView let us go? Can we pull up some charts from like the 80s here? Let's do 1 week on the NQ. We might have to do the QQQ though. Yeah. Oops. That didn't help. What about the SPY? There we go. We can get back to 94 at least. So if we look at the last corrective phases from, again, just a realistic standpoint, this is the S&P now. That pullback was about 50%. That pullback was 56%. The most recent pullback was 35. So, 50% pullback. That would put the SPY at 215. Take it how you will. So as we continue this upward ascent, going from the bottom to the top, we've got the POC at the highs, and this is the seller's attempt. As far as previous areas of interest, before that breakout above the top, and I see all the questions too, I'll get them in a minute, we're just hitting the open. Are you saying we should keep our bullets in BTFD? I mean, hashtag just saying, Very aggressive leg to the downside. Likely that we see a continuation to the downside on this kind of movement. But again, it's a little bit difficult wanting to buy the or sell into this move with the understanding that the market typically likes to continue down. I'm going to look for a little continuation here, but it's got to be faster than slower, that's for sure. We're dealing with the open. Previous bull bar's low is at 45.75, which is a logical first objective. Seeing if we can get more continuation to break below that area and keep it going is going to be the tough part. Oh man, they tapped that break even and rejected it hard. Holy crap, there's a lot of volume coming in on the sell side here. Another nice bear bar. Beautiful continuation down. There we go. Fantastic. They might have a little more to try to push down to the lows. The first one, that little doji, I exited the one just to bring down the risk and take a quick little 2 or 3 ticks off the top. Because, again, we're dealing with the open. But that continuation drive down, really, really nice. They still haven't broken the low. S&P is opening with a inside gap up. Holy crap. An inside gap up on the NASDAQ. Go figure. Or the S&P, rather, sorry. First 5-minute bar right around the corner. This little consolidation here. How do they want to close? Ooh, that's a really nice bear bar. Looking for a continuation breakdown. Bang! There it is. Woo! Yeah. Very nice. I almost didn't get a fill. Did you see that? I threw that on the ask and it almost didn't fill. It had a quick little snap up right before the drop. Whew, thank you, NASDAQ. Whew. Very nice continuation lower. Now, from a corrective phase back to the downside, because that's very much what this may be. If we go from the bottom to the top and we cycle this back up to the highs, we can see we've got a fairly obvious, that one went 0.7. The ABCD correction that usually takes place after a 5-wave impulse on leg or wave A should have a 5 impulse in it, right, within, and we don't even have that yet. So this has a lot of potential for further movement. Is 80% pullback also realistic for the ES? I don't think so for the ES. The S&P historically pulls back about 50 to 60. Which makes sense because there's more markets. It's more inherently kind of distributed. And yeah, those two pullbacks were essentially just a gigantic range. I wish I could go back further. I'll have to see. I think we go over this every once in a while. Like, where can I get more data? Sellers looking for maybe another push down, but again, it's kind of a funky little spot they got going on here. As far as a picture-perfect ABCD correction down, although incredibly aggressive since that pullback was only 2.8, but a 1-to-1 move down would put it right about 14,802. Oh, wow, what a horrible candle. The market could be coming back to potentially fill in some of the VVP action back here, which is sorely missed. Could also be down here. They kind of highlight the outer areas of the 1-to-1 move. What would be a decent pullback, 2% or 5%? In the narrow term, you'd have to look at I mean, the last pullback was yesterday. Oops. The last pullback was yesterday, and that was from top to bottom 1.12%. So if you want a value pullback, you double that. So 1.12%, 2.24. So if you want a value pullback, then that would be 14,548-ish. Which lines up pretty nicely with the previous consolidation. That's really far away, though. But definitely possible. Bulls are trying to get this to climb back up, but I think we know what the problem is here. They've got some incredible difficulties that they're going to try to push back against. The one saving grace is where, in particular, it's bouncing. That helps a lot for the bulls. First 5-minute bar on the S&P is a monster of a candle. Very nice bull bar. 43, 42.50 is the POC for that. And the total polar opposite on the NASDAQ. Jeez. Wow. 45 is the POC, I believe. Yep. 14,845 on the NASDAQ is that area. Wow, that looks like an almost picture-perfect ABCD correction back again, too. Yeah, 1.04. I mean, it went 4% past. Sellers may be trying to give it a shot here. We can see a reason why, right? They're still trying to reach out for that corrective phase down. There's no POCs or anything like that back here in the 800s to 810s that would really want to hold it up. The next POC is 14,770. And that's from the bottom to top. Coincidentally, that's also in where that flag formed too. Really the most obvious pullback the market had the entire day from the bottom. This thing's nuts. What a crazy rally to the upside. Oh. Yeah, and settlements down there. I mean, the 1-to-1 move works, it fits, but there's the other part of me is like, well, why wouldn't they want to reach out and grab that? Or maybe bounce ahead of it, you know how they like to play. Bull engulfing bar back up again. Let's see how the follow-through operates on this. Looking at the volume on just this pullback, we can see that we are attempting to currently challenge that area. All right, I'm going to look for a short continuation. There it is. Jeez, I had like 2 seconds to respond to that. Holy crap. Give me a quick little snap back up. A lot of people didn't have a chance to hit that. Another nice pop back to the upside. Drop underneath the... Now they can't get it. They're having a tough time at those 830s. I'm out. I tried to reposition myself for a short again because I took that profit so quick. But it jerked up real fast, and then the POC shifted, and then they couldn't get underneath it. Too many problems. I'm out. I'll take it while it's worth something. See if they can continue back down, get a little bit more proof of something better looking. Nice little bear bar, something like that. That's not it. They did close under the POC, so that's helpful. On the S&P, we've got bar 2, which likely will find buyers underneath. There's no candle gapping between 1 and 2, but realistically, at the low of bar 2, or even at the open of bar 2, there will be buyers there looking to defend for a continuation pulse back to the upside. 44, 43, 42 would make sense, and that's with settlement kind of in the middle. That helps even more. Look at that failure on the NASDAQ. Holy crap, if the swings are going to take a long, that's the one. Whoa, 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 whoa. That failure right there is a huge reversal point. Sellers tried getting something going here. Miserably failed. Now the market's trying to climb back up again. A little further. Next pullback zone for S&P, 43, 44. If we're looking across the board, other zones of interest... I don't even, I mean, maybe they hit it on FOMC, right? We've got some 84.4 zone of interest for a 1-to-1 bounce off the measured move. That's about it. Given that we gapped from the close of this incredibly strong bull bar to the open of the next, I'm going to offset a little bit. I'm going to go for 43. Buying the low of that bull bar, there may be buyers there for sure. But the problem is that if they are trying to buy that and we gapped down, there's a lot of pressure up at the top that could cause an extra push down towards the 43s. I would rather try to compensate for that. It does mean that you run the risk of not getting filled at all. 43 testing. There we go. 44 is the objective. It's obviously a lot of buyers buying that same spot, but man, tested the target, no fill. That's like the second time now. All right, they went through 43 now, so if those were all buyers, let's see if that's enough to get this to pop. Testing the target again. Hey, finally, nice. So it was a good call to offset, and it just kind of made sense. With this excess pressure up at the top, why buy directly underneath it, you know? I mean, I know I run the risk of not getting a fill, but I would rather try to get a deeper pullback to allow a bit more flexibility. And that way, if you're trading multiples, that even opens the door for potential runners and larger moves back up to the top. Plus, it lined up a lot better with the 5-minute POC. That helps. Seeing more continuation to the upside. And it looks like the sellers tried to take it, but they're kind of falling apart a little bit. One of the big clues is really that this could potentially all... Man, that would be nuts. I'd be back at 797. Big bear bar back to the downside. They did leave behind that POC down there in the 830s. And we are now through 945. Driving back below the POC. Now they missed the POC. Oh, just kidding. Just shifted it to the downside. Okay. This feels like they're trying to get a new low, but they could also just be looking for a value pullback into the 830s for a swing back to the upside. The risk for which would be underneath the lows, but the target would be inside the Euro session highs. Probability is terrible. But it's there. So swing longs are buying the dip into the POC retest. The target for them, for at least for the 2-to-1, is inside the Euro session high, so it's definitely helpful. If we bring this all the way up to the... Oops. No. All the way up to the top. There we go. That's back up at 14,860. Yikes. Well, it's a good thing the 2-to-1's ahead of that, too. More bearish attempted continuation to the downside. Nothing really happening. S&P offered up a nice scalp, had a couple nice moves so far in the NASDAQ. Pretty good day, all things considered. Especially considering FOMC is later, you know? Like, man, I feel like FOMC days are such a roll of the dice. Nice bullishness back up again. We already know swings are long. They're trying to take it back to the upside. Euro session highs, that's their objective. Now, it would be fairly interesting if we rifle through the Euro session highs, because there really wasn't any support at all on this drive down. Back to 5-minute POC. $10 right around the corner. That's the first news announcement, or at least the big news announcement for today. Big bear bars off the moving average is a value area high. Got myself one for the rotation down in the 1 minute. Nice. I don't really look at the 1 minute too often. How is the 1 minute as of late? I feel like the candles have got to be huge still, aren't they? I guess not always, huh? Some of them can be pretty sizable though. Ooh. Lordy, lordy, that first one off the top there. Yikes. Let's see if we can get that 2% pullback today. Looking like the bears are trying to get something going. Very nice drive to the downside. They have made a new low. Wait, did they? No, they didn't. Man, I thought that big pulse down got it. It didn't. All right. So now we've got kind of like an ABC wave into another ABC back down again. What a wild ride. I'm going to look to see if I can grab a quick little short off of this pop here to get a drive back to the downside, just like that. Perfect, thank you. Jeez. I'm not necessarily interested in holding for a new low, primarily because they missed it, but I love that rejection off of the POC, and it's really hard to ignore that for at least a scalp. I really like that area. They might break down to a new low. This is a very challenging spot, because if they don't, then all of the sellers who are stuck trying to get this thing to go down are, well, like I just said, they're stuck. We'll probably see a squeeze and this thing go nuts to the highs. Another really nice bear bar starting to plot. Bear engulfing now. Jeez. While bear engulfing always makes me feel like I missed the majority of the move, and in hindsight I can see that I wasn't planning on holding it that long anyway, but I guess in hindsight I did miss part of the move, at least, if I would have just held. That wasn't the intention of the trade at all, but it just feels like I missed the majority of the proper locations to be entering. Nice little pop higher here. Could be a reconfirmation. Sellers selling into that rejection and trying to drive the market back down. They're really trying to get this low side breakout. Now, a strong bear bar down here, which it's not. It's a doji, never mind. I was going to say a strong bear bar would be either an immediate failure or an immediate success. Doubtable that it sticks around long either way. NASDAQ pulling down, and the S&P starting to kind of catch back up to it as well. Chopping back below the first 5-minute POC on the S&P. Last zone of interest, I mean, the major swing high they left behind is back at 337.50. Settlements quite a bit further, though. Don't mind the caffeine. Wow, what a bull bar. Watch the response to this bull bar. It's going to tell us a lot. Because that bull bar snapped right back up to the POC and stopped dead in its tracks. Did the S&P go one tick above the high? Yep, sure enough. They closed above it. Wow. This quick little dip to the downside, I'm going to use this as an opportunity for buyers. Whoa, I'm going to jump out. I got a terrible fill. What was that? Got a hit buy bid when it was in the 28s, and I got filled up at 30? That was basically my entire scalp gone based on that fill. Well, I gave it a shot, but I exited with a small loss on that because of the fill. Nothing I can do about that. I guess if I waited a few more seconds, it would have jumped, but I'm not waiting for hope. Very nice bear bar. That would be the third lower high in this sequence as well. A little awkward. Especially given that it followed up that gigantic bull bar. And the fact, excuse me, that they could not make a new low. 5 minutes until 10 o'clock. There is news at 10 o'clock, and that's also where we will transition over into the VIP session, extended session, and wrap up. Oof, S&P, what a candle that that bar 5 is. This is one of two things. When you have a candle like this inside this range, this is the start of one of two things that's going to happen. This is either, and more likely, a washout that will reverse back up towards the highs because we're more range bound with a bullish intent. Less likely, and therefore more on the swing side of things, sellers will be looking for a continuation play with stops above the highs and a drive down to settlement. That's why the reward is about twice as large as the risk, because the probability is bad. There's typically only two scenarios that form when you get a bear bar inside the range like this. Technically, that still counts as the third lower high bear bar right off settlement. Okay, bears are trying maybe. Let's scoot this forward a little bit. Uh-oh. Ooh, that's real bad. Oh, man, that changes things a little bit. Yikes. Being underneath a 3 lower high with a POC. Oof. That's an oof, if I've ever seen one. The bulls have no hope unless they get above that. Not to say that they aren't already potentially buying in the lows, but, I mean, we already saw that, but... Feel free to get those questions in. We'll get those covered for you. And then we can rock and roll. Don't forget to, while we're on our way to the 2,000 subscriber mark, don't forget to subscribe to the channel. We're doing those giveaways. We just did the first one yesterday, if you haven't seen it. And don't forget to like the video and all that. It does good for the algorithm. Hey, Shalom, how's it going? This might be an underside POC retest, especially with a weak bull bar. That could be a potential cycle all the way back down. And Ace, welcome. Everybody else, of course. Oh. It seems like that might have been an underside POC test. If that's the case, the bears will start following through to the downside. And if they pop back above it, that's a massive problem for every bear who's trying to get a short on. All they have to do is crack one of these highs. And it completely negates the entire pattern. It's all it takes. Attempting to break back above the POC. Could the ABCD leg be earlier? 9:30. Yeah, that could be the one too. It just didn't go as far. Usually if I'm looking for an ABCD move, I would like to see a 1-to-1 move, but if that doesn't happen, it doesn't mean that it's invalid. It just effectively all it means is that the bulls are so strong that they're disallowing it from happening. But before I turn into a buyer off of something like that, I need a lot of proof. You can see I didn't even start hitting the buy button until over here, except to exit trades, so it requires a ton of proof in the way that it's moving, because that's usually not the case. 10 o'clock news here, pushing the market back underneath the POC. This is probably going to be a mess for a little while, huh? sliding back underneath the POC. 3, now 4 lower highs. I'm just kind of stuck inside all these swings. All right, well, it is 10 o'clock, a little after, so let's switch gears. We'll jump over to the extended session. For those of you who were just here for the morning session, you're ducking out. I hope you had a great morning, and you had some pretty solid trades going on. Otherwise, though, if you're going to hang out for a little while longer, we'll see you in the extended session and the VIP session. You get to listen to me talk to myself for a minute while we swap over. Enjoy the rest of the day. Rest up. I hope you had a great one, and we will see you all tomorrow morning. All right? Have a good one. We'll talk to you all later. Thanks.